Welcome back, everyone. You may have noticed an uptick in online content and comments talking about SCHD struggling this year. It appears that some investors are becoming concerned about the Golden Egg Dividend Growth Fund as it finds itself under-delivering in 2023. Perhaps you've taken a look at a chart similar to the one on my screen, showing that SCHD is down 6.25% year-to-date, while the S&P 500 is up 9.99%. Missing out on 16.25% return during the past 4.5 months can feel painful. Comparing SCHD to a technology ETF like QQQ makes it look even worse. QQQ is up 27.14% year-to-date and beating SCHD by more than 33%. That is a whopper of foregone total returns. But what has already happened is set in stone, and selling SCHD today in favor of the S&P 500 or QQQ will not change the fact that you missed out on returns of 16 or 33%. So the more important question is what will happen tomorrow, next month, or for the remainder of your investing journey. And here, the picture becomes a bit less clear. The past 4.5 months are certainly not reflective of where these three investments will move to during the remainder of the year, or next year, or the next decade. The thing you need to come to terms with as an investor is that your investment will not always produce the best return, especially during a relatively short period of time, like 4.5 months. If we take a look at the returns from 2022, SCHD finished the year down 3.23%, while the S&P, as measured by SPY, fell 18.17%, and QQQ was down 32.58%. So last year, even though your SCHD position would have lost value, it would have left you in a much better place compared to holding SPY or QQQ. This year, it appears that the trend from 2022 is reversing, and these three funds are breaking even. That's just how the market works sometimes. If we zoom out further to the trailing 5-year return, it looks like SCHD has performed on par with the S&P 500, both having a total return of around 67%, while QQQ performed better with a total return of nearly 108%. The chart does tell us that the ride with QQQ was much more bumpy, with higher highs and lower lows. While I don't believe you should compare SCHD to QQQ, because these two funds target a different investment style and will deliver different returns over a long period of time. SCHD is likely to perform on par with the S&P 500 total return, but it will deliver a higher cash flow in the form of dividend income versus capital appreciation compared to the index. I often see investors make comments that they can't wait for the next market crash or a large pullback to load up on their favorite investment. But when this actually happens, as we are seeing with SCHD today, instead of getting excited, we look for problems or reasons not to double down. I personally believe today is a great time to buy into SCHD, and I have been doing just that in my own portfolio. If SCHD continues to struggle this year, I'm going to keep buying and building out my position. This mindset works for me because I have a long-term outlook for my portfolio, and I am confident that SCHD will offer strong total returns, a good level of dividend income, and strong dividend growth well into the future. I am willing to see my portfolio underperform the market in the short run, and wait patiently for more prosperous periods on the horizon. Of course, there is no guarantee things will play out the way I envision. As with any investment, you take the risk that you may be wrong, and perhaps I will have to settle for below average long-term performance. But I will not let fear or emotions guide my decisions. Instead, I will look to history and fundamental data to make the most educated decisions I can. With that said, let's have a look at the history of SCHD and what it can tell us about its position today. I put SCHD into my dividend yield theory modeling tool to see how attractively valued it is today and to see how well it performed historically when trading at similar valuations. Dividend yield theory points to SCHD being 12.3% undervalued right now, with a price of around $70 and a fair value around $80. The DYT graph shows me that during the past 7 years, SCHD is traded at a fair or undervalued price more often than it was overvalued. We can see a brief stint in the overvalued zone during late 2017, mid to late 2018, and for the majority of 2021. The ETF dipped into undervalued territory in early 2019, again during the 2020 pandemic, and once more in late 2022. Today the price is trending lower, and SCHD is moving closer to the dark green, deep undervalued zone that starts at a 15% discount range. Running this type of valuation analysis for a fund rather than a stock is less reliable, mainly due to the variability of dividend payments. A typical dividend growth stock will have stable and predictable dividends in the future, aside from the dividend increase amounts. ETFs, on the other hand, may not pay consistent dividends, especially if they are simply passing along dividends from their holdings onto their own shareholders, as is the case with SCHD. Because SCHD holds 100 unique dividend stocks, it's very difficult to predict the quarterly dividend it will pay, as each of the underlying holdings follows a different payment schedule, and they all announce dividend increases at various times throughout the year. SCHD has a very good history of dividend growth when measured by calendar years, with 6 out of the last 10 years seeing double-digit increases. The long-term CAGR is also pretty attractive for a dividend ETF, sitting in the low double-digit range. Since we don't know what the annual dividend for 2023 will be yet, the short-term growth in my table is not very reliable. Let's now take a look at the long-term performance of SCHD and how well you would have done if you purchased shares at various valuations. I calculated the annualized return for 1,402 trading days between October 20th, 2016 and May 16, 2022. This shows me the rate of return of buying SCHD on any day during this period of time and holding that position through today. The average return comes out to be 7.78%, which isn't great, but it's not that bad either. And we have to keep in mind that SCHD has been in a slump recently, and all of the individual daily returns reflect this slump. The worst daily return is minus 8.47% if you happen to purchase SCHD on April 20th, 2022, while the best return is plus 23.84% if you purchased SCHD on March 23rd, 2020. The average dividend yield for this period of time is a pretty solid 3.15%. Now, if I filter the data to show me only the trading days on which SCHD appear to be undervalued based on dividend yield theory, I come up with 902 days. So during this roughly 5.5-year period of time, SCHD was undervalued a little more than 64% of the time, and the average rate of return for only the undervalued days is 9.45%, which is a 21% improvement over all trading days, with the average dividend yield also improving from 3.15% to 3.31%. That sounds pretty awesome, and it tells me that applying dividend yield theory to SCHD would have worked out favorably during the last 7 years. Given that dividend yield theory suggests SCHD is 12.3% undervalued right now, based on history, it sounds like a good time to buy. But let's narrow this data down a bit more. Let's take a look at how SCHD performed historically when it traded at a 12% undervaluation. To capture a good amount of output, I filtered the dataset to show me all of the trading days when SCHD was more than 12% but less than 13% undervalued. And we get a total of 31 trading days, which is a rather small sample of about 2.2% of all the days in my dataset. The average dividend yield for these 31 days was 3.41%, which is an improvement of 10 basis points over all undervalued days. The average rate of return also improves to 10.98%, or about 16% higher than the rate of return for all undervalued days. If I filter the data further to show me all of the days when SCHD was more than 12.3% undervalued, we get 271 days. The average dividend yield for these days is an impressive 3.72%, with the average rate of return being 12.85%. If you believe as I do that SCHD is a reliable long-term investment, you should be excited by the below-average performance this year, rather than question whether the ETF's glory days are over. I have personally doubled down, and then some, on my SCHD position. It's currently the single largest holding in my portfolio, with an allocation of 9.85%. I owned 336 shares, with a market value of a little more than $23,000. Based on the most recent dividend rate, I should receive about $862 in annual dividend income from SCHD, which makes up about 16.5% of my entire annual dividend income. I'm going to continue moving money into SCHD, and I think I might let it run all the way up to a 20% allocation. I've been trimming a few of my winners, and some positions I no longer want to hold, and a big chunk of the proceeds go into SCHD. I'm curious to hear what you think about SCHD right now. Do you think it's a good time to buy, or do you think its superb return days are over? Let me know in the comments below. If you enjoyed the video, please do me a favor and give it a like and subscribe to the channel to help me grow this community. Thank you for watching and see you next time.